Good morning, everyone, and welcome to the morning call. I'm Laz, filling in for Scott, the Red Dog Redler, who is out today. On this wonderful Friday, we have some things to discuss, news out of the bank, some earnings news from JP Morgan, Wells Fargo, as well as our Friday random walk across Wall Street, look at a few symbols, look at a few sectors, get sort of a broad idea of what's happening and what maybe we can anticipate going into today and possibly into early next week. As you know, or maybe you don't know, we have kicked off earnings season. So on a day-by-day basis over the next few weeks, you're going to see most of the companies, especially ones that we track here more frequently, banks, tech stocks, biotechs as of late, report on a day-by-day basis. So there's going to be lots of specific individual trades for those of you that are more on the short-term basis, the day traders, as earnings season always presents good tradable opportunities. The stocks generally will, have some directional move based off of the earnings report. Sometimes good, sometimes not so good, but tradable events always. So make sure if you are trading, you are aware of when your specific stocks are reporting, because it's important that you know, as far as if there's headline risk involved in what you do or what you have. That being said, let's take a look here at the S&Ps. We're going to look at the spiders. And I want to kind of go out here on a limb, and I want to, it's not that I want to make, any sort of large, bold calls. But what we see here is a market that has certainly changed its composure. Going back to October, we had that nice move off the lows into January, into April of this year, where we peaked out here in the S&Ps, right around 1,400 or 140 in the spiders. You can see those highs. We then had that pretty aggressive sell-off through May, and now we've ebbed and flowed our way back a little bit, trying to claw back to those highs. But this structure to me, and I'm going to say right here, looks very ominously different than something that I would suspect to be very, very bullish. If the market wanted to, go back and get back to highs, I have a feeling we probably would have been there or done that already. And this to me looks very bear flag-esque, meaning for those of you that are not really as technically inclined, looking like a potential setup for maybe another leg down. So be very, very careful in how you tread this market here, as this could potentially have another leg down effect. Obviously, if we push back up here, and we'll get into the real short term, let's get granular here. If we broke a little bit out of this pattern yesterday, again, this is a little on the more subjective side, as trend lines are always open to interpretation. But it looks like we broke that level, 1335 in the S&Ps. And I can actually bring up the S&Ps here. 1335 in the S&Ps has sort of been the line in the sand here for the better part of a while. And we can go back and we can look at that right here. You can see that 1335 mark has sort of been that that line in the sand per se, where it's trying to hold here. We've seen multiple touches, and we're still right there. But I'd be very, very careful here, as we did break down out of this out of this ominous-looking channel pattern. And a lot of times these ascending channels, when they do break down, can become very, very nasty, downside type situations. So keep an eye on that in the days ahead, as this is something that I think we need to be very, very careful about and watch very closely in the next coming days to see how price starts to react here. We did see a little bit of a bounce yesterday. We gapped down in the S&Ps, and when we found a tradable low around 1325, there was this sort of methodical grind back up, but nothing nothing real impulsive. So the price action to me wasn't so much that that we participants stepped in and said we need to own, we have to own. So going back to the daily, I know I'm flipping around here. Not a very positive close, although intraday we did see a little bit of a pushback off of that 1325 level yesterday. So something to keep an eye on in the days ahead. Let's talk about JP Morgan and some of the banks, the two that had earnings, JP and Wells. And we talked about this yesterday in the recap. And if you weren't able to see the recap, I highly suggest going back. It is a little long. It is an open Q&A. You can fast forward through it and find parts that are interesting to you. But we covered this stock as well as banks in general. And what I said here was that if you look at sort of the macro picture of the weekly chart, the bears seem to be in control here in JP Morgan. You can see under these declining averages, had that impulsive move down, that 3-bar snapback. This is classic technical type of movement here, and then we got that red bar down. So the bears, to me, seem like they're firmly in control of this stock. And as we look at the daily chart, that's still pretty clearly evident. This morning, I would have anticipated some sort of large directional gap, either taking it back to the higher end of this, range into the 37 area, or possibly even, below this little short-term low we put in a few days back. But really very muted reaction. I think as we speak right now, the stock, let's take a look here. The stock right now is trading around 34.60. And we closed right around 34. So up about 50, 60 cents, relatively, in my opinion, pretty muted. Not a very large gap. Nothing that changes the overall landscape here of what you see. So we're going to keep an eye on JP Morgan intraday to see, how price reacts, how the market really treats this stock. But we're going to watch these levels closely, but nothing that really changes what's happening here. And Wells Fargo, another one that reported, and again, pre-market right now, 32, looks like 32.80, 32.70s. The stock closed right around there, so we actually closed at 32.85. So really no reaction whatsoever in Wells Fargo from the earnings report. So sort of a ho-hum event, not really, usually with a gap or an earnings, you'll see some sort of, the range will expand. We'll either break out of this range or break down out of this range. And, it seems to me that we're still sort of sitting here in this range and nothing has really changed. Now, obviously, as the market opens and there's either going to be money flow in or money flow out, we'll keep an eye on it for maybe more of an intraday type of trade. But nothing structurally, has changed here, as per their earnings report. We talked about this one yesterday, Wells Fargo, as well in the recap. And the one thing that was clearly evident here from a larger time frame is that 35 is definitively your resistance. You can see we have multiple touches into this upper 34, 35 zone. So keep an eye on that, as we've had over the last 2 years 3 attempts to get through this level, and none of them have been successful. So just keep that in mind when trying to initiate a trade or evaluate, is this a good opportunity in terms of risk here. So into this area probably presents a little more risk. Personally speaking, I'd rather see the stock clear 35 on some good volume before I really get aggressive on the long side in this trade, as it's in a zone where you could potentially come off of resistance. So keep that in mind as you approach that trade, if that's something that you fancy. A couple other trades, I think, for the shorter term traders. Netflix, definitely setting up here for potential higher price. I think the level that we have to pay attention to is the open gap, which starts around $90. You can see this is where we have this big, open gap back up to 100. I think it will probably have, we might see a trade back to 90 in the next day or two. But be careful in this stock because it's just not that strong of a stock. Right now it's in a nice bullish, flag type of pattern, and really more for the active intraday traders than I'd say for anybody else. But this is a trade that looks like it wants higher. I'd say $90 is going to be your first level of resistance before then, maybe potentially pulling back and then gaining some steam for another potential leg higher. So we'll see how that goes on a day-by-day basis. As Netflix, is a widely short. There's a lot of shares that are short, and when it does have a short squeeze or starts to turn bullish, it can happen very fast. You can see we went from 70 to about 85 in a matter of 2 trading days. So fairly large move in a very short amount of time, and that's the power of these of a high beta name like a Netflix. So we'll keep an eye on that. On the weekly chart, just to get an idea, definitely found a tradable level down here in the 60s. I tested it and then retested it. So it looks decent. But again, I'd much prefer to be a buyer on a pullback than trying to chase this stock at higher prices into the declining 21 EMA here, right around 85. So, you know, just keep an eye. I think that's more of a VTF intraday trade, but something worth watching, definitely. Another one that's, you know, really, I guess, oversold, if you will, or has been an extreme downtrend is Sina. Sina into support here. You can see down here at these lows. You look to the left, you can see that this level, which is right around 46, 45, that's where buyers have lived. And yesterday we saw a nice, you know, surge off of that support level. Nice big green bar. Still, the structure is what it is. Still in a downtrend. Nothing to, you know, get excited about. It is one up day, but it is off of a larger area of support. So let's see if this can, you know, give us some follow through and maybe get a little bit of a short squeeze. There's probably a lot of money that's short here. So something to keep an eye on is some of these higher beta names, as this stock could definitely, you know, rally back to resistance. Let's call resistance really up here around 56, 57 area. That to me is definitely something we could, you know, could potentially look at for a, you know, an oversold bounce type of trade that I know that day traders tend to gravitate to. Another stock that has an interesting pattern, again, I'm just sort of going over a couple random stocks, is VHC. Interesting level up here, just around $40. The stock gapped up yesterday around 40 prior highs and sold off. Has been in a nice uptrend, you know, continues to look good. I think up here you might see some more basing, you know, maybe a couple of days, if not a week or two of basing before maybe getting through that $40 level, or we've just double topped and you might see some more aggressive selling come in. So again, a trade that probably could go either ways, and I hate to sound not definitive here, but unfortunately, you know, one day doesn't define a trend, and this stock is still in an uptrend. We still have to respect that. And, you know, a trade through these, you know, through yesterday's highs could result in, you know, another move up. But we have to understand that this is now resistance. I got a question about this last night in the daily recap, so I just wanted to cover that one. Nike, another stock that you know, had a big gap down on earnings. You know, when you separate off of your 21, as you can see the stock did when it gapped down, you know, now this is what we call mean reversion. It's trading back to the 8. I suspect next level will be back to the 21, where it would potentially fill its gap. That's right around 95, 96. So this stock building a nice 4 or 5 day base here at the 8. This to me is a trade that could give you one more up leg into the 21 EMA, where I would be definitively a seller. So look for a, you know, a cute long, as Scott would say here, in Nike, potentially through highs into that 95, 96 area. And lastly, ORLY, another name, gapping down and now trading back to the 21. This is probably, you know, it may have a little more gas left in the tank, possibly up to even fill this gap, but it's now into a zone where it's, you know, going to be into prior resistance, and it has, you know, given you that mean reversion. So keep an eye on this one for a trade, possibly even, you know, higher than to go potentially lower. I've seen this type of trade happen before. So just a couple different trade ideas that I wanted to throw out there for those of you seeking, you know, some shorter term trades. And lastly, what would be a morning call or a day without discussing everybody's favorite fruit, and that's Apple. 620 line in the sand. We've seen a nice 3-day pullback here. Nothing, you know, that says that we're not still in a bullish camp. The little 3-day pullback into the averages, tailing up yesterday as the market, you know, rallied a little bit through the course of the day. You know, as we approach earnings in the next week or two, you know, to me, like I said yesterday, this is a day trade only type of vehicle. If we take out 620 with massive volume, you know, that could give us another leg higher. But my gut tells me it's probably not going to happen until maybe the earnings report. So we could be in a range up here between, let's say, 590 and, you know, 620 area, where we see some ebb and flow and some ups and downs and pops and drops, potentially building a nice, you know, base up here, potentially to launch higher. We do have to respect 620. It has proven itself to be formidable level of resistance here, and again, you know, a few days ago back here on this rally. But it is a strong stock, and we do have to respect that, you know, at some point, if we do get above 620, you could see another squeeze higher, potentially even, you know, 700, if not higher. So something to watch, but for now, it's really more of a day trade. And lastly, just to throw a precious metal out there, we're going to look at gold and the GLD. And Scott and I, you know, more so Scott than myself, has covered this at length. Very hard money. Gold's a place where I know it gets a lot of attention, a lot of eyeballs, a lot of chatter. There's a lot of traders out there that like to trade gold. But the reality of it is there's no trade here. It's not a good trading vehicle. I get questions about this all the time, whether it's on the VTF or in my email or on the recap. What do I think of gold? What am I doing with gold? And the reality of it is I'm not doing anything with gold. It's not actionable. And I think that there's always going to be traders that want to try and be in it because they think it's going to make a move. So when you're a little unsure of something, always go out to a weekly. And when I look at the weeklies, I always get a sense of clarity. I can make more sound rational decisions or expectations, if you will, about what I can anticipate. And the clear level here is the 148.5 line in the sand. You can see that it has been support. It continues to remain support. This to me does not speak of higher prices. Potentially in a little bit of a descending triangle, you have a flat bottom support, and you have lower highs here on the way down. So this potentially could be something that I suspect may break down, but it could break higher before it breaks lower. So it could go either way here, which is why I am not actively trying to trade gold or get involved with gold. It's just, to me, it's not the low-hanging fruit. It's not the easy money. It's not a place where I can definitively feel like I have good handle on risk. A break of 148.50 in the GLDs on good volume to me tells you that something has changed. When that happens, I don't know. I don't think anybody can make that statement. But it's worth watching at either level, either up here into this descending trend line or down on a break of support. I think right here, sort of in the middle of this range, makes it a very, very tough trade for anybody to be involved with. One day it's going to look good, the next day it's going to look awful. So it's an ebb and flow type of thing. And at some point, the GLDs will break out of this range. And when that happens, again, is anybody's guess. I can't really tell you that. But what I can tell you are the actionable levels. So for right now, the theme has been to day trade. We're going to continue with that theme. I think today there's going to be some eyeballs on the banks with the earnings. We'll see how the market reacts to those early on. Tune into the VTF for that. And make sure, if you are local to Manhattan, New York City, New Jersey, Pennsylvania, Connecticut, anywhere in the area that's within a nice car ride, get to Manhattan on Saturday. We're doing the Active Trader Summit. It's going to be a great day. It's a full day event, different speakers, different presentations, great place to network, meet other traders, talk to us, get our opinions, introduce yourselves. Whatever it is you'd like to do, you'll be able to accomplish there. Learn a little bit more about what we do and how we do it. I will be there. My colleagues will be there. Mark Sperling will be there. So if you want to know more, check out the homepage of T3 Live. Look for the Active Trader Summit, the banner at the top, and then I'll give you all the details on how to sign up and register and what to expect. Have a great trading day. I'll talk to you on the virtual trading floor, and have a great weekend. See you at the Active Trader Summit, hopefully.
Hello, everybody. My name is Pete Renzulli, Chief Marketing Officer of T3Live.com and one of the traders in the Active Mentor Room for T3 Trading Group. What I'd like to do today is I'm really, really excited about introducing you to and inviting you to the first T3 Live Active Trader Summit in New York City, which is on Saturday, July 14th. We're going to have quite a few speakers today. There's going to be myself, Mike Lee, Evan Lazarus, Mark Sperling, Rob Smith, Rick Meadows. There's going to be a ton of great content, but the number one reason you want to come is you want to be able to network and associate with other like-minded people like myself. I'm going to pump you up. I'm going to guarantee you that. Other people like yourself who have a burning desire to learn how to be a trader. So I'm going to ask you to make a trade. Trade one Saturday for some of your time to come down and learn strategies, tactics, techniques, and put some faces to the people that you see in the virtual trading floor in T3 Live, and learn to take your trading bigger. Learn how to be a better trader than you are now. Learn the strategies. It's going to be a lot of fun. I can't stress that. I know it's a Saturday, but you know what? I want you to be there, to get excited, and to be here. Prove to yourself how bad you want it. Show up and come down and get excited with us. Saturday, July 14th. Now, very quickly for the registration. All you have to do is register at T3Live.com or be an existing member of T3Live.com, and you get 2 complimentary admission tickets for free. So all you have to do is go to T3Live.com and register. If you would like to join us at the post-event cocktail reception. You can also upgrade to either premium or VIP. That's up to you, but either way, please take advantage of the general admission, 2 free tickets. Bring a friend, bring a neighbor, bring a wife, bring a girlfriend, maybe bring both, but come down and expect to have a great time. Saturday, July 14th here in New York City.